Changes in Ottawa, or big changes coming. I'll leave the politics, the political pundits. I want to talk to you about what does this change mean for Canadian taxpayers. So what does it mean?
Well, essentially, when government prorogues, and it's prorogued until March 24th, 2025, any legislation that had not previously passed essentially dies on the order paper. It's not, the approval process is over. In order for that to become law, that same legislation or changes would need to be reintroduced in a future session of Parliament. Okay, and that's going to depend who's in the Parliament, what's going on there. Let's go through all the big proposed tax changes that we have been talking about. We're not going to do all, we'll hit the big ones. And let's start with the capital gains inclusion rate. So first off, tell me what's different, because the CRA came out and said, I believe, that they still plan on going through with it. Who does this affect, and what do they need to watch out for? So for the capital gains inclusion rate, we're looking primarily at corporations who had that immediate increase in their rate. That would be anyone operating a business through a corporation, including physicians, lawyers, accountants, anybody else who's operating a professional corporation. It would also be impacting individuals who had gains in excess of $250,000. So if you sold a property, for example, last year, that might be bumping you up into that higher threshold. Right. And now with this change, what is it? What do they need to think about? Well, if there's, if you have already filed, then you may be in a position in the future, if this does not become law, that you would be looking to file an amendment and maybe get some of that tax that you have already paid back, given that if you're a corporation, for example, you're paying at the 66.67%, now you only need to be paying at 50%, you've got some money coming back to you. The process about how that's going to happen, a little bit unclear, and for those who don't yet need to file, might have a little bit of a wait and see. Okay. Alternative minimum tax, the AMT. Again, who's paying attention to this and what's happening? So again, these are high income earners. There were changes already that have passed on the AMT that increased the exemption amount to $173,000 and increased the rate to 20.5%. That is law. That's going to happen. But there were additional changes that were intended to align the AMT calculation to the changes to the capital gains inclusion rate, as well as introduce further limits to the deductibility of certain expenses, including investment management fees, for example. So that's no longer on the table, would need to be reintroduced. Okay. Charitable giving deadline extension. This applies to anybody who's trying to give money to charity. And so this was an announcement of an intention to introduce legislation in the new year. The new year is here, and we don't have Parliament sitting, and so the earliest that proposal could be even made in Parliament would be March 24th, and the deadline was proposed to be extended to February 28th. So I would be, a little bit reticent to move forward with that. But keep in mind, any donations that you do make, you can be carrying forward those into future years, so the next 5 years in any event. So never a wasted. Keep donating. Just the timing changes on the deduction. Lifetime capital gains exemption. Again, who does that apply to? So this is primarily business owners who are operating through corporations, and this allows them to, provided the corporation meets certain requirements, that they are able to exempt up to the proposal, $1.25 million of capital gains in order that they can shelter. Now, there already is a lifetime capital gains exemption, 1.016 indexed, so that already exists. This was proposed to increase it to 1.25. It may get reintroduced, in alignment with other objectives, but currently it is wrapped up in this other legislation that has died. Okay, and the last one is bare trusts. And again, who did this apply to? There's a lot of unintended people that applied to. This is the issue. This applies to many more people than it was intended to apply to. CRA made an administrative concession for the 2023 tax year to not require bare trust to file. They came and announced an additional extension to that for the 2024 taxation year. And then there was legislation that was going to be introduced to be able to resolve going forward who the bare trust rules would apply to, how they need to be filed. There was a lot of significant changes to refine that. That legislation is not moving forward, would need to be reintroduced, but I would presume that the extension for the 2024 non-requirement to file would continue despite prorogation. So I will say that's a long list, and I think a lot of people are listening to this and thinking, gosh, how does this affect me? I will say, because you've told me, we're expecting updated tax forms on January 31st, 2025. But in the meantime, for people who are listening, all that legislation may not be happening now. What should they do? Work with your advisors. Work with the people who know you best, who understand your overall situation, your goals, your objectives. Tax is one element. It's an important element, but it doesn't drive the show. There are other things that we need to be thinking about, other trade-offs, and the advisors that you work with, working with your investment advisors, your accountants, your lawyers, who really understand what you're trying to achieve, can let you know whether or not any of these changes impact you at all, but also be giving you some really valuable advice about the tax strategies that are on the books that you're able to utilize now.
Nicole, thanks so much.